All right, hey, how's it going, guys? Welcome back to the MentorFX private mentorship. I thought I'd put this quick video together just to show you a few things regarding multi-time frame analysis, finding entries on multiple time frames, using context properly on multiple time frames. So before we talk about it, this is gold right now as it is. And as you guys know, gold has been on our watch list because of the scanner. So the MentorFX scanner, we simply went in here and for my personal system, we looked for a 15-minute bullishness. Well, for the bullish side, we looked for 15-minute bullishness, 1-hour bullishness, and I believe it was daily bullishness, something along these lines. So this is kind of what we looked for, just to analyze and look at a few markets that would be setting up or could be setting up. And this is where we got gold, NAS, some cryptos, and some other markets, right? So then after we take this, we go ahead and find out, we actually take a look at the market. And as a lot of you know, we arrived at the conclusion to trade gold about 2 weeks ago. So gold has been on the radar. This is when it initially came on the radar for me, right around this point here, when it was showing general bullishness across the board. There was a little bit of bearishness, but that's okay because the chart told us the story of what price actually wanted to do, and overall looked very, very good for longs. Now, before I go any further for a second, what I want to do is I want to go up in here. So in case I make this video public for the public YouTube, I just want to showcase something. So this was the initial thought process that we were watching for, right? This is when we first started looking at this. We had a webinar breaking down this exact trade, overall longs, looking for those longs to continue. And this is the initial trade I took. So the buy stop through this high, just buy stopping it, and simply got tapped in. Just like that, instantly started fading and took me out for a beautiful quick loss. Then I sent out this follow-up, right? So accumulation into reaccumulation, setting up beautifully, was looking for the next potential long, and then sent out this beautiful guy. So here's that buy stop again through that high. Here's that exact high and that buy stop through it. So that got activated. We began to manage it accordingly, began to go into beautiful profit, moved it to break even, of course. So again, same market, everything's moving beautifully. Found it through the use of the tools that are provided right here. Easy markets, took some partials into strength for the 1 to 3, took some more partials into the loss of strength for like a 1 to 6 or something, but took off the 50 of what was running. Then the rest is currently being trailed, right? You can see over, I just want to see this continue going. So the rest is just trailed at break even at the moment. And you guys can pause this video right now and have a read of some of this, or just go back into the mentorship and find these areas, because, you know, there's a lot of psychological things that can help you here just to get you through this. But came barreling back down, nothing too insane. Sent this out at the beginning of the week, looked very good, just expected it to go sideways and then maybe make a setup around here later. The market started out this week very, very aggressively. Here's that aggressive push upwards. And I just sent out to the team that it's probably going to go sideways for a while, kind of chop around. And that's exactly what happened. Price began to chop around beautifully, exactly as anticipated. So this is going through a stage 1, which is basically what happens before price begins a new run, right? And if you can look at a market that has already shown you the willingness to go in a certain direction, and you allow it to then undergo stage 1, which is accumulation or distribution, weak to strong hand transfer, and then you trade on hopefully the breakout of it, that's where you make the most amount of money, right? Because you're already on the direction of trend. You're already with the big money, the composite operator, the smart money, whatever you want to call it. And then you're getting involved with the actual schematic or with the actual weak to strong hand transfer, so that you're at the last point that price makes that decisional factor of running and continuing its given move, or failing and you get to walk away. This is the beauty of trading and being a trader for yourself, where you can sit on the sidelines and wait for those things to happen. But nonetheless, I then sent out this to the team right here. So it's just accumulating right now. Looks very, very beautiful. Looks very good. And, you know, I drew the schematic in to show people what I'm looking for and how I use the exact concepts I teach to personally get involved in what I want to see. Back in the day, personally, when I first started trading, this would have already been an entry for me very likely. But over time, I've refined my system to take into account more confluences that would decide for me whether I'm going to follow something or not. These include how the MAs are moving, how they're moving in tandem with price, how price is traded above or below certain down candles. These are demand validations or fractalized MBs, as I teach in the mentorship. Not something I'm going to go into super depth with right now, but a lot of really important stuff. You can have a read right here if you really want to. This is just me talking through what I'm looking for, what I'm expecting, the market condition of price now versus prior. And then I sent out this little beautiful picture right here. So last week, I sent out an image of this and said that in this given moment, if you're someone that trades a 1 minute or lower time frame, given that this is a 15-minute time frame, this is those moments where you'd be getting involved in a 1 minute, right? So what I'm doing is I'm looking at a higher time frame because my entry time frame is a 15-minute. I'm looking at one higher than that to decide whether or not it's in a context that's even worth trading, right? So before heading down to these minute timeframes or to these 15-minute timeframes, I'm looking at a higher to make sure it's in a good context. Now, if you're someone that's trading a 1 minute, well, you have to potentially wait more for those timeframes to be good, or for the 15-minute to be clear, to then schedule your way lower. So like this area right here that I circled, that you can see right here, is a perfect area to start watching for longs on a lower time frame, because the higher time frame, in this case, the 15-minute chart, entered a overall accumulation model with an overall bullishness and started moving long, which means that any move inside of here was very, very nice for longs to then sustain the move to the top side. So what's interesting about this moment now, before I go any further, is if I move up here, I sent out a little something about it, not too much, but a little something about it right here. Like this is where I had a drawn, actually don't worry about that. Let's go back down for a second. So what I did is I asked my team to take a look at this and said, really understand what's happening here versus here. This is the exact same model, the exact same price action happening. It's just that it's happening a little bit differently because that's how prices move, right? A lot of people think that prices move in a very clear pattern or move in a very clear indicator-defined fashion. The reality is they don't, right? The markets are what I call, or the movements within the markets are what I call the snowflake, right? They move within a snowflake rule. Every time that something occurs, right? So when it snows from the sky, and when you walk outside and all the little snowflakes are coming down on you and they're hitting your beautiful face, you know that's snowflakes. Snowflake lands on your hand. Oh, beautiful snowflake. Oh, beautiful snowflake, right? These are snowflakes. You know what they are. They're beautiful. That's phenomenal. You know that every single thing that's falling is a snowflake. However, if you look very closely with a microscope, you'll notice that each snowflake in itself, and you might have learned this in school, have a very different pattern, right? They're all very different. So if you look at this, this one might look like this, like crazy, boom. Like when you zoom in on it, wow, what a beautiful snowflake, right? Wow. But zoomed out, it looks like this. Similarly, this snowflake that you zoom into is going to look even more different. It's going to have its own characteristics. This snowflake's going to be a little more wonky, whatever it is, because each snowflake is unique. However, it's the same thing, right? Each snowflake is a snowflake, but it's unique. Very important, because the same thing is true in the market. Every time you have a blueprint or an accumulation or something like this occur, an accumulation, the ways by which the accumulation or the weak to strong hand transfer undergoes can be unique. It can be different. The types of accumulations that form, the types of weak to strong hand transfers that form can be unique and different. However, the thing that's occurring is always the same. It's always the same reality. If you're within a market that has proven itself to be bullish and is moving bullish across timeframes, and you're on your time frame of entry, then as a schematic, a weak to strong hand accumulation forms within a bullish context, because this is an example of a bullish market, it's telling you the same thing. It's telling you that the market is ready, very likely, for either an explosive move that you can now be a participant of, or the move is going to fail and you get to stand back and be patient and wait for the next setup or the next market that sets up, or simply walk away from that market for the rest of the week, for the rest of the month, right? So in this scenario here, when this schematic happened, the way that it occurred, selling climax, secondary tests, liquidated the secondary test for a secondary test in B in a spring. This is basic Wyckoff methodology stuff. This is taught in section 3 of the MentFX mentorship. I walk you through exactly the types and how to spot them, right? When that happens, price is telling you a certain bit of information, which is why I took this initial long right here that you can see resulted in a beautiful loss. This was shared with my team. I mean, you can scroll up and take a look at that. That's all there. Fantastic. And then it did it again. It went through the selling climax. It went through secondary tests within the selling climax range. It liquidated those secondary tests for an ST and B and then began a new accumulation. At that point, the same thing happened as it happened here. The price was telling you that it was very much likely ready for a run up. And then that explosive move came that I was able to sustain my first move in. It never came back to break even. And then what happened? Price underwent a new accumulation, selling climax, secondary test, liquidated that secondary test through an ST and B, liquidated that ST and B through a spring. And again, at that moment, as it began to move higher, it let you into that crucial point of the price is either ready to explode or it's going to fail down and start going sideways or doing some choppy shit that you can now stay out of. This is the power of patience, right? This is what I teach a lot of my members to do. I teach them to analyze the markets from a standpoint that allows them to be patient over the long run, so they don't show up to any given market any given day and just start trading anything and everything because, oh my God, the market's gonna move without me, blah, 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 blah. And then lo and behold, the same thing happens here, right? The way by which this undergoes is the same. The labels, for the most part, are exactly the same. However, it's a little bit unique, but the same thing is happening. So you know at this point right now, price is going to do one of two things. It's either ready for its given move, and I'm watching for an entry right now as we speak. So if this now corrects for a little bit and maybe sets up something along these lines, I'm taking the long right here. I'll be taking that buy stop. I'll be in that buy stop in addition to this one because I'm also holding this overall long right now from this initial point here. So again, you've entered that criteria where the same thing is very likely to happen. This is the snowflake rule. This is where the same thing is happening. It's just happening a little bit of a different way. And you can't predict it just through this easy use of like an indicator. This is why trading is complex. And this is why most people that think it's easy and are going to get funded very quickly end up failing very, very quickly. This is one of the pinnacle reasons, because they think they can find something where they can learn and earn, get some quick signals and, you know, get it all down without having to do the real work. This is what the real work looks like. But the reason I make this video is because notice what I sent out to my team here. I wanted them to bring their attention to these two areas. This one specifically right here, the one that happened right after this spring, this area here, and then to this area right here, before it ever crossed over this line and where it was right now, this little green area here. So I'm going to draw those green areas in again. I'm going to move this to the left. I'm going to simply take this, draw this as a green area. So we're going to edit this and we're going to get rid of the border and we're going to make this a beautiful, beautiful little green area just like that. So I brought the attention of my team to these 2 points here. This is what I sent out to my team. And I wanted them to notice that these two things that are happening are exactly the same. They are snowflakes of each other. They are representations of the exact same thing, but they're happening a little bit differently. And for instance, if you were a 1 minute or sub 1 minute based trader, 15 seconds, 30 seconds, these are those opportunities to now get involved. So if you're someone that's like, getting on every day, I want to trade my 1 minute chart. It's always failing. It's always wicking. What the fuck? It's change of character every direction. Why is that happening? You start realizing that you're not actually trading a real system. Real systems come from understanding moments in time where you can take out true edge out of the market. That's all you do as a trader. So whether you're a 15-minute, 1 hour, 1 day, 1 week, 1 month, Warren Buffett, fucking 16-month, 1 minute, 2-second trader, I don't care what kind of trader you are. If you don't have moments in time that you understand you're going to look at price, right? If you don't have those moments in time defined for yourself, you're always going to be failing. This is where most traders lose consistently. The traders that don't understand to look here or here and start watching there for prices are the ones that don't understand to look there, are the ones that fail, because they end up looking not only here and here, they also end up looking here and 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 here. And when you're doing that, you're guaranteeing that the outcomes of the things you're doing are going to be random. And if the outcomes of what you do are random, well, you're going to have random results. And if you have random results, you're never going to find true profitability, and you're going to stay in this limbo of being unsure about your system, sometimes very sure of it because, oh my God, it's working, and then back to not sure, sometimes getting funded and then losing your funded account, or never getting funded, or blowing your brokerage account over and over again. That's the limbo you exist in because you have no solid basis from which to base your actual understanding. You have nothing that you have nothing to grab onto. So when I sent this out to my team, I wanted them to see that at these moments, this is where a 1 minute or sub 1 minute based trader, a lower time frame based trader, based on the context, would scale down. Accumulation is happening within bullish markets. Accumulation is happening within bullish markets. This is where you scale down and watch a lower time frame for entries. This is where you scale down and watch a lower time frame for entries. Now, I teach my team to use a ICI based method for entries. That is simply, okay, there was already a beautiful trade right here, but that is simply a method where you allow price to start moving, you allow price to undergo normal stage 1 accumulation again, and then you get involved through the buy stop of the next move higher. Usually a good ICI setup will look along the lines of something like this. Usually an ICI setup will look along the lines of something like this, where you simply buy stop this point right here, whoops, where you simply buy stop this point right here to take money to the top side because the market has shown you where it wants to go. And then the same thing is true for the flip. Exact same thing, you just flip it, okay? So given that understanding, right, these are the moments where, let's go back to a 15-minute here. These are the moments here where those moments are going to be accessible for you. That's where you would want to scale down on, if you're a lower time frame based trader, to actually take edge out of the market. Now, you know, I don't know if I'm going to get a trade on this based on the way it's moving right now. I thought this was going to go a little bit slower, but that's fine. We've just validated the, so with this candle in about a minute, we'll validate the FMB, and hopefully it'll then come back down, push back up, and then give me a setup around here later tonight or by tomorrow morning. So this is what I'll be expecting. This is where I'll take a buy. But 1 minute or sub 1 minute based traders, like 15 second or 30 seconds or anything like that, the opportunities have been provided to you. Price underwent its normal stage 1 accumulation, started a beautiful, beautiful move higher. This comes directly from the premium workshop that I made available to all of you for completely free. So any of you that have gone to my channel, this right here, the premium workshop, some of the elements of what I taught you in this was seeing price clearly, putting in a directional bias on the time frame of entry before you start looking for entries, right? So at this point right here is where you start to watch for entries, given the fact that the higher time frame has shown you bullishness. And now the lower time frame is lining up with the bullishness it's showing. And then, lo and behold, you get the exact ICI-based entries that I teach you guys to follow. This is exactly that move. There it is. That's the buy stop you take. Now that can happen multiple times. You can get multiple legs of these in a setup, right? It can do something like this, and you can get setups in any one of these. And these are rules that you're going to create for yourself as you get better and better at this. There's a setup for a buy stop here, 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 and even here if you really want it, right? These are all opportunities given the ones you want. And if you take the specific rules from this exclusive mentorship video that's available to all of you, you would just simply throw your stop under this low and then let it go. Or if you're like me, you could use the functionality that I've provided to the team, if you're part of the premium mentorship, of course. So if we go here, you can use the premium that's been created for you, where there's this little green box that appears for a good area to place your stop if you are taking a buy stop. So if you're taking a buy stop through this high, right? This is all, of course, available with the MENTFX Structure Premium Indicator. That comes with a bunch of stuff, the MAs, the models down here, really easy stuff, where you simply take your buy stop. If this is the buy stop you want to take, throw your stop in the green box below, let's say a low, and look to take it long. Then if you don't want to take that one, so there it is, we get tapped in. If you don't want to take that one and you get another setup like this one right now, and you want to take this setup, well, you would take your buy stop and you would throw your stop inside of this green area, in an area that makes sense to you. You could throw it here for a better risk to reward, or a little bit further away for a little bit worse, but for more protection, okay? And as it starts going, you can get another setup. If you didn't take any of these, let's say you want to take this one, because all of these are meeting the criteria of an ICI within a bullish market. And you can simply be a buy stop participant of that, given this model here. This is the ICI model as I teach it. Very easy to use, and a ton of information on it already provided in this video alone. And at the same time, if you're still here right now, I want to remind you that if you click in the link below on this mentfx.com/insider list, okay, just type in your email for free. You're going to get 3 videos instantly, okay? Well, 2 videos, part 1 and 2 of me doing a live trading back test, walking you through my thought process and how I look for trades using this exact model, right? For you, about 2 hours long, for completely free. So please sign up for that, right? It's very helpful for you and for me, because then I get to send you information that's actually going to help you, hopefully, right? Or if you keep waiting, so let's say you didn't take any of those trades, then you'll get another one, as you can see right here, and you can buy stop the next high. If you buy stop the high, you can protect in the green box if it makes sense. You can protect maybe under these lows, and once again, wait for a long. If you get tapped in, maybe you now protect this low here, because that's happening in the green box, right? And there you are, you get tapped in, and you get, okay, and then it goes, okay? So you have both of these trades, and then you can, again, manage your trades in accordance with what I taught you in the premium MENTFX trade plan, or with what I teach you in the mentorship in regards to using the MB ranges, right? And the momentum bursts, okay? So that's a very powerful way to manage. But these are opportunities that are given to you on those lower time frames. And those are the moments that you want to watch for them, because, again, those are these moments here. About a week ago, I sent out this point here and said, lower time frame traders, this is where you make your money. Good luck. And I sent it here again. Lower time frame traders, this is where you make your money. This was sent to them at this point here. Good luck. And now, just within the last 30 minutes of me making this video, you have all seen what this market has become. You have all seen what this has moved to. And it has, in the time that it's set up, created multiple of these opportunities based on your given rules to take advantage of, right? All the way through there. I mean, you guys are going to study this and get better at this, but these are all phenomenal opportunities. And now it may set up some more. So right now it's actually undergoing that exact same thing. We would wait again for a snowflake accumulation, something along these lines here, which has not happened yet. So we would expect this price to now chop around or to undergo some breakdowns, something like this, and then start setting up moves around here. And these are going to be the opportunities that you can again take if you're a 15-second based trader. Now, the reason I say this is because I know a lot of traders trade on a lower time frame. And if you are one of those traders, this is something that is going to be helpful to you right now, even though it works on all time frames, because you're going to realize that it's the same thing. You just need to be willing to wait for the perfect times. And those perfect times are actually definable if you allow yourself to do the work instead of focus on, following a random inducement-based teaching like this where you think this is going to help you trade when it's not, right? This is not the way that markets function. So, now we go down, right? Markets function from an understanding of how orders have entered that market. And the way you understand how orders have entered a market or are sustaining a market or whatever it might be is by doing multi-time frame analysis, understanding where you exist within that market in tandem to the time frame you're using. So if you're using a 15-second, then of course you could use a 1 minute and a 15-minute as your main higher time frames, right? This is what I teach as the rule of 30, for instance, on my channel as well. But I'm not going to get into that right now. I just want to show you what's available to you and that, this is... I started making this video, as you guys all know, before this price ever set up. This video, the beginning of this video was like around here, I believe, and then the actual send out in the mentorship was around here. This is the same thing happening, that same snowflake of Wyckoff, the same accumulations, then the entries that are presented to you, and your ability and your ability to now get entered. Now, because I trade a higher time frame, I'm still waiting for a potential entry for myself. But if you're someone that's trading a lower time frame or is on like a 100K, a 1 million account, with a funding evaluation like Ment Funding, for instance, well, you're in a really good boat because now you have something that you can build out for yourself and do well for yourself with. Again, it's not a guarantee of any sort, but you can build out a system for yourself and you have the tools to do it now, okay? So I hope a lot of you understand why I wanted to draw a lot of your attentions to this in the private mentorship. Initially, what's happening here, exactly what happened here and what happened here, how Wyckoff accumulations, how weak to strong hand are used and can be used to understand when to actually scale down if you want to scale down to a lower time frame, right? This is the same exact thing, the same thing repeating over and over and over again. And now I simply get to sit on the sidelines and wait for my personal next entry, right? Let's get rid of all these. And there you have it. So I hope you guys learned something. I'll be getting into this gold trade if it sets up for me in the next, actually very, very likely in the next 30 minutes, I'll be in a trade on this if it wants to set up. Again, I don't know if it's going to do that because I don't know at any given point whether a market's going to set up or not. I just know what it looks like and what it's likely to do if it does what it needs to, and then I can get involved. And that's one of the best ways that you can build out a system for yourself. So if you want to learn more, if you want to get a more defined approach, get down how to actually, label your Wyckoffs from a very, very beginning foundational level and get better and better from a standpoint of what we do here and get access to all these tools, well, the community is easily the place for you. And it's a monthly one, so you can join for one and see if you like it or not. If you don't, you're good to go. But sign up for that insider, it's down below, and get access to those videos for free, okay? They're gonna help you a fuck ton, and hopefully this video also helps you a fuck ton and unlocked you to the truth of how these pattern-based abilities to enter are not going to help you, right? Here's your pattern for the rest of your life. There it is, okay? This pattern will make you millions potentially, not guaranteed. Probably not for most of you, but there's your pattern. Now your job is to understand when to use this pattern, because if you don't understand that, like any other system, you're going to lose a fuck ton of money, right? Because if you're entering random shit everywhere just because a candle created an imbalance or something of that nature, well, the guarantee is that you're going to be losing money, because if you're not focused on markets where money's coming into it, or you're just focused on just anything and everything that has a setup or a pattern, well, you're going to have random results, and we already know what that leads to. Okay, guys, thank you so much for watching. Love you all, and I'll see you all in the next MentFX video. Bye.